the bounce continuing. We've got a very green day on our hands. The ES up almost 100 points. The NQ up hundreds of points, almost 500 at times. I remember a week or so ago, or even the week before, I was trying to take a stab at how high the bounce would go. And I think I made a face and like something like 5,800. We're getting there. The SP is about 57.63 right now. It's getting close. And I'm going to show you a graphic as a reminder in a second when we get into the charts to kind of revisit the whole issue of bounce. So I don't have a huge list of symbols today, but that'll give us a little bit more time with each one. So let's jump in. We begin, as always, with our friend the spider. This is the entire history of the biggest, baddest ETF of all. And we've got bear market 1, bear market 2, and then ain't no bear market here. I should say bubble, more like it. So this is our big rounded top for the internet bubble and the financial crisis bubble. And then ever since then, the everything bubble has continued along. And recently we had one of the fastest drops in history. And we ground around the past couple of weeks, really just going nowhere. As I said, lots of smoke, not much fire. Today we got the fire. It finally reached escape velocity and we're blasting higher. And on the spider here, this resistance line isn't rock solid, but it isn't a bad place to suggest the first level of important resistance. It gets a lot thicker up here. So we shall see. The reason ostensibly behind today's rise, of course, is yet another waffling on the whole tariff thing, because we've been told tariffs are going to be in trillions and trillions of dollars and we won't have to pay for it. And we might not even need the IRS. We'll just have the ERS. And tariffs have been on and off like a light switch for weeks now. And I guess most recently, the magical word is narrow. Right? Narrow tariffs, very specific, surgically made tariffs, which sounds to me like a lot less money. But the market got very excited about this because tariffs would have been freaking the market out during that brief but very tasty tumble. So yeah, up we go. And the spider's up, almost 2% right now. And as I said, the VIX is just getting pound-a-ronied here, which is zero surprise, because for years now, if it gets anywhere close to 30 or so, then something happens. There's some new program or some bailout or some pronouncement to beat it back down. And so as we zoom in here, you can see that the peak we had recently was the second highest VIX we've had in years. And when we last really focused on this last week, we were 1, 2, 3, 4 days into burning that off. And the graphic I put together was this, a little illustration of recent history of how long does that, I don't have a fancy name for it, but just I call it burn off. How long does the burn off of the VIX last? And it varied. 9 days, 14, 9, 4, 7, 4, and then this is just a big question mark. When we were at 4 days here, obviously that was probably not going to be it, and it certainly wasn't, because we're 9 days in now, and we've gone from almost 30 down to 18. And historically, we've been beaten down to 15-ish or so. So we're on our way. 9 days probably isn't it either. We've gone as many as 14 in recent history, but there have been shorter ones as well. So we're making progress is my point. Yeah, so there we have it, the VIX with an 18 handle, having peaked at 29.56 on the 10th. So we've come down a lot, about 40%, and we've got a little more to go, I think. Looking at some other odds and ends ETFs, here's the diamonds. Obviously, everything's rallying, obviously. Here, too, is a not terrible resistance point, but not necessarily set in stone either. There's no super obvious gaps or anything like that. Just the higher it goes, the thicker that overhead supply gets. EFA is actually down. Overseas markets, basically non-North American markets, not enjoying anything like the rally the U.S. is. really just doing a whole lot of nothing right here. The lifetime high was, I guess, on Wednesday, and we've just been skulking around like so. But, the kind of lift we've been waiting for, Home Depot is not the market, of course, but I think it's representative of the kind of rally that we've needed to see. And I've pointed out this beautiful head and shoulders before, and we fell. Even on Friday, it was still really battered down, but we're zipping higher on HD, up over 3%. And, could keep going back up to that neckline. The closer a massive individual stocks gets to its own resistance, the more likely the market as a whole is done with that. The small caps themselves, IWM, also rallying quite smartly. They had bottomed a while ago, back on the 13th, and in fits and starts, they've been repairing themselves. So we're basically back to where we were during the plunge back on the 3rd of March. So as you can see, let's just say that dash line represents the end of the bounce. We're getting there, 70% or so. Good progress. The cubes also up strongly, like the NQ is up 415.5 right now. In this instance, we had broken this trend line going all the way back to around Halloween 2023. We fell very sharply and steadily, bottomed on the 13th, pretty universally. The 13th was it. Spent days just grinding around, going nowhere, and then blasting higher today. And so in this instance, the rally could get us up to maybe this line, maybe even the underbelly of that broken trend line, something like that. But as I say, we're there, about 65-70% done if the entirety of that potential bounce does play out. And more specifically, SMH, the semiconductors, up over 3%. This one I could make a little more of a case for being just about done. And so 233.14 is the horizontal on that one. It's not rock solid. I just keep issuing these disclaimers to you. But this is kind of the lowest level of a defensible resistance that I could argue. And of course, within that, there's all sorts of components. Just the one I'll mention is NVIDIA, which had a super obvious bottom here with respect to its trend line, and it went bouncing higher. Interestingly, it's lower now than it was intraday back on the 17th. So it had actually peaked here, fell again, and then is resuming that strength. So I'm using the high of the 17th as a possible resistance zone there as well. A few actual live positions. Apple's one. Apple's up today, but not that much. 0.74%, nothing like the 3% we're seeing like with SMH we just looked at. Pretty reasonable resistance right there, and a massive overhead supply with that reversal pattern. IonQ, this is the only quantum computer public company that I think has a really interesting pattern. Having a big, strong day on this one, a 17% gain. I think ironclad resistance is up at this gap, so it could have more to go. Although this topping pattern right here, maybe that's enough. Maybe today's about all she's going to get. Hey, you. Merck, another live position, is actually down. Incredible. You don't see much red today. This is down 1.25%. And we peaked on this one like so, fell a little, resumed, and then finally we're curving away from that resistance. So this looks interesting. We've got a massive overhead supply here, collapsed, sprang back, stopped short, and are starting to sell off again. And major support, of course, should be down where that trend line is. Netflix is up about 1%, but it hasn't busted above this midline yet. And I say yet because, as I've said every time, it keeps disappointing the bears by pushing above what should have been its topping pattern. It might do it again. One even modestly update tomorrow would do the trick. But at the moment, it hasn't done that. So we're still below that midline. Seagate STX, also up, but not that much. I'd say this dash line here, represents pretty reasonable resistance on this one on STX, and you can see at a greater distance how well formed that topping pattern is. United Health Group, UNH, this one also down a little bit. It has respected its gap, and that is the hard stop there for any bearish positions on United Health Group. And one last one of the few that's falling even a little reasonably today is Wendy's, WEN, our big diamond pattern on that one, down almost 2%. And we have been slipping slowly but steadily away from there. And it takes time on these. I mean, I talk about Jack in the Box. Jack in the Box was a beautiful head and shoulders pattern, and it took months, but it's lost a tremendous amount of value. So kind of a similar situation, I think. Tesla is getting a much needed update, and quite a big update, double-digit percentage gain. You know what word's coming next, which is Fibonacci, sure enough. And we had rallied on Friday right up to the fib, and today didn't waste any time, gapped higher, and whoosh, up we go. So now we're in this range again. Makes a lot of sense that it would be such a potent move, and it wouldn't surprise me to see it challenge these levels once more around 300. Tesla, of course, has been very much in the news because of Elon. There's this 500 dealer protest plan for this upcoming Saturday. So a lot of negative press, a lot of defense of the company, et cetera. A lot of emotion tied around this stock, but it had plunged from 488 all the way down to 217, 55 or so % loss, maybe even more, and it's starting to recover from that. But I do think these fibs are going to be some pretty tough rebar to get through. Gold is off a bit, and I had made mention on Friday that I was looking more than a little pricey. I actually bought puts on it for the first time in a long time early today, and those are doing pretty well. So GLD is down about 0.5%. Duke. Okay. How are we doing? A couple more odds and ends. NQ, obviously a big update with this one, but take note of the channel. This channel is very important. Goes back a couple of years. We cracked this. We started a little damage, a little teasing right here, and then finally with some gusto on the third, cracked it for good. Fell, pushed back, support became resistance. You can see right here, bang, bang, like so. Fell away hard, and we're zipping higher today. And so it could well push all the way back to that trend line, which would be very powerful resistance, but it might not even get that far. This line might represent a stopping point. So a couple of prospects there here, and then higher still. The RTY, the small caps, maybe has stopped out today. We've got a nice topping pattern here. We're between the fibs. We've gone all the way from this fib bottom to this fib top, and we seem to be stalling out a bit there. So that might be all she wrote on that one. And in the few moments we've got left, just wanted to point out SOXL, the leveraged semiconductor ETF. Beautiful topping pattern on this, a hard fall, obviously getting a retrace, but I would be very surprised to see if it could conquer even this dashed line right here. This is a very potent reversal. And the last point to make is about crypto, Bitcoin in particular. Bitcoin's been very strong lately. We have rallied mightily. We bottomed here. I beg your pardon, that's SOXL again. Bitcoin, where are you? I didn't punch it in. BTC, point. Bitcoin bottomed right here, down at about 76,000. We've gone up many thousand since then, but we are getting close to that psychologically important 90,000-ish level. And so, as I've said all along, if you have nothing to do with crypto, it's a very important element to the overall atmosphere. And if it stalls out at 90 and starts to sink, I think that'll contribute also to equity weakness.